let's have a look and see what the data is telling us. So our data expert today is Ash. He's going to come in and talk cotton seasonality with us. Ash, what stands out for you?
It's a few things, actually. I mean, just to kind of touch on what Alexis was talking about with the pound. The COT data on the pound is probably the most interesting of the currencies this week. Not so good with the 36 month, but we see the near term at 97% and the really near term at the 6 month at 100%. Now, one of the reasons that we're starting to see some interest in the pound is because of the Bank of England's Governor Bailey, is intimating that he's really concerned with inflation, and he is probably putting his head above the parapet with rhetoric. I mean, obviously, we've seen other markets and other currency and economies move on their interest rate, but Bailey's putting his head above the parapet when you compare them to the dollar. What's going on with the Fed, what's going on with the ECB. And he's basically saying, this is a concern. And it was very close last time whether they were going to decide to push the interest rate higher. Now, we've got another event coming up another decision coming up in December, and we're starting to see some interest with the pound. So for that reason, I think the near-term COT data is of interest. Normally, the 36 month would be the one that I'd want to focus on. But for this particular period, I think the near term is a lot more interesting because 18 month and 6 month, and we've got an event coming in a matter of a few weeks where the likelihood is we do get a push with the pound to the upside. So that suggests that if it's not priced in already, the dips will be an interesting place to start looking to buy the pound. If we then look at the seasonal chart, what does that tell us? Well, it looks like this particular week, we're right at the end of November, right the way up until the first week in December, we do tend to get a pretty good run on the pound. That's a pretty steep move that we see on the seasonals, coming into alignment. So I like the pound because this would suggest COT data is in a line, seasonality is in alignment, and also there's a fundamental driver that, even though supposed, is certainly there as some kind of indication that there would be some value to the pound in the coming weeks and in the coming months, and particularly with the way inflation is going. I'm also just going to touch on the stock market as well, because we've been discussing the stock market. Julian's been discussing the stock market. And particularly talking about the tech industry. And look what we see here. E-minis, the NASDAQ 100 stock index, very, very low on the 6 months, down to 1% on the near term here, 21% on the 18 month, 21% on the 36 months. So only 1% away from that bearish region. Anything below 20% starting to get a lot more bearish on the NASDAQ. Now, we know that COT data is not a timing tool. So really what we want to see is that the commercial traders are losing their interest in the NASDAQ and the S&P. You see the S&P down here as well, very low on the 6 month, very low on the 18 month, and still it's not near enough bearish on the 36 months to be that much in stress. But let's just have a quick look at the NASDAQ and dive into what the buyers and sellers are doing here. So we've lost the net position. The red line here is telling us that the sellers are increasing, while the green line is telling us that the buyers are just starting to dissipate a little bit. They're just starting to ease off a little bit after them really being more interested in the bearish. You can see that the green line is above the red line there, but then there's a little cross here. So the cross is saying to us that the sellers are just starting to increase their power over the buyers at this particular stage. Well, let's see if the seasonality can help us out with this, because this tells us there's a warning. It doesn't tell us to sell. It just tells us that there's a warning coming. There's a warning now, and there could be some downside coming. So let's see when the seasonality would suggest that downside would come. And the seasonality, we see that it tends to rally right the way up until the first week in December, ease a little bit, rally into the end of December, and then start to get into a little bit of a choppy range before we see some downside. It doesn't look that significant, but the downside comes in around about the middle of February. Now, that would be in alignment with COT data as long as it remains down at these particular levels. So could be 2 to 3 months away before we start to see the easing back down with the NASDAQ. but I'm certainly interested in signs and signals now to the downside, because it may come a little bit earlier. The Christmas period tends to be pretty good. We have seen some overinflated retail sales numbers recently, which could suggest that a lot of people have done their Christmas buying early. So the next retail sales number will be watched relatively closely, and that may well push us to this particular down period just a little bit earlier, maybe sort of as the turn of the year comes, maybe January, maybe the start of February rather than the middle of February. But got the button really ready for a sell signal from the NASDAQ and possibly the S&P as well. With the valuations where they are, I think we should be really kind of making sure that we are focused to make sure that we don't get caught in a long that we don't want to get caught in. And if there is a short, it could be quite lucrative. So to summarize, pound looks very, very good into this week. The NASDAQ is starting to show some signs and signals that we should be looking for potential downside within the next 2 to 3 months. Back to you, mate.
Cheers, mate. Continues to be a fascinating market for me. It really does. And we'll be interested to watch how this NASDAQ does play out, because I do have a feeling that if the NASDAQ does pull back, the whole stock market around the world will pull back. So it'll be interesting to see when. It'll happen eventually. It'll be interesting to see when it does happen.
Yeah, I mean, looking for the catalyst is the trick here, mate. Really, I mean, you look for catalyst in the NASDAQ, for downside, you won't find them. Earnings stellar, companies in this lockdown situation that is sort of starting to happen again. We know what happened with the tech market when the lockdown happened. They did really, really well because people need tech to kind of improve the way that they're going to work. So the catalysts just aren't there, and that's the key here. What is the catalyst going to be? I mean, it'll probably come out of nowhere. We probably won't even know what it is until it's a week into its play. Yeah,
I reckon there's a great old saying in trading, Ash, the cure to high prices is high prices. Eventually it just gets very high, and people don't want to buy it up there. And at the moment everyone wants to buy it up there, and good on them. But every market corrects, and let's not pretend the NASDAQ hasn't corrected in the big run up. Of course, there's been corrections, and there'll be more. There's no question about that. For my benefit, as you say, what is it? Just high prices that push it down, or is it something else? Likely to be something else at this stage. We'll watch some Fed meetings pretty closely as well on what they're saying with inflation. Cheers, mate. Thank you very much for that.